The best strategy for getting rich fast from dividend investing is to find investment vehicles that offer all of the important metrics when it comes to building wealth consistently and quickly. Now, a few of these important metrics are things like price appreciation long term, a nice starting dividend yield, a higher than average dividend growth rate, and of course, in this case, an ETF that has a solid basket of holdings. Now, in this video, we're going to go over what might be one of the best strategies by combining 3 super high quality dividend growth ETFs that are offering all the metrics we talked about. And I'm going to show you exactly how by combining these 3 ETFs, an investor could build a massive portfolio long-term with even a relatively small amount of money invested. Now, if this interests you at all, make sure to please drop a like down below, subscribe, and let's get into it. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So before we go through the first dividend growth ETF that offers all the things we're looking for and more in order to potentially get rich very quickly from dividend growth investing, I wanted to, of course, be completely clear that there's other dividend growth ETFs out there and, of course, other dividend growth stocks that can definitely all get you to the exact same place. But these 3 that we're going to go over in this video are just 3 of my favorites. Now, the first dividend growth ETF, one of my favorite of all time, is ticker symbol DGRW, or the Wisdom Tree US Quality Dividend Growth Fund. Now, DGRW is an ETF from Wisdom Tree, and it says Wisdom Tree US Quality Dividend Growth Fund seeks to track the investment results of dividend-paying large-cap companies with growth characteristics in the US equity market. Now, the idea behind combining 3 super high-quality dividend growth ETFs like we're going to go through in this video is because every single one of these dividend growth ETFs is what I would consider super high quality for multiple different reasons, but on top of that, each one of them offers something very specific. And when it comes to DGRW, the first dividend growth ETF, I would say the holding breakdown and the top 10 holdings are what makes this ETF really stand out in my opinion, and is the reason why I'm going to most likely start buying a ton of DGRW very soon here. But to back up for a second, looking into DGRW's performance so far on the max time frame since around 2013, this ETF is up around 184%, so the price return is definitely substantial, at least it has been historically. Now, DGRW is trading towards the higher end of the 52-week range, so it's not necessarily a massive buying opportunity as of right now in my opinion, but if it does dip a little bit and or if you're a long-term dividend growth investor, there's really never been all that bad of a time to buy some shares of this one. Now, DGRW does have a pretty expensive expense ratio compared with some of the other ETFs we're going to go through in this video at 0.28%, so that is something to keep in mind. And in my opinion, that's probably the only thing about this ETF that I'm not really thrilled about. But to look even a little bit deeper into DGRW's holdings, which is again what I think really makes this ETF stand out for the dividend growth investors out there, this ETF is majority technology, which means it's going to have the potential to grow a little bit faster than some of the other dividend growth ETFs out there. The next biggest sector is things like healthcare, industrials, financials, consumer defensive, and consumer cyclical. Now, the top 10 holdings really shine when it comes to DGRW. We have 300 holdings, so it is very diversified, which I like personally. But Microsoft, Apple, Johnson & Johnson making up the top 3 names, which you really can't go wrong with any of those. Then we have companies like AbbVie, Broadcom, The Home Depot, Procter & Gamble, Coca-Cola, PepsiCo, Cisco, and others. Now, as we kind of went over in the product summary when it comes to DGRW, this ETF does focus on dividend-paying large-cap companies with growth characteristics also. And even though DGRW does have the potential to grow so much, or at least it has historically, the trailing 12-month dividend yield is not horrible at 1.77%. It's not the best, but the dividend growth rate is pretty good. And speaking of dividend growth rate, over the last 10 years, we're looking at 18.4%, the last 5 around 7%, and the last 3 around 8%. So even though by investing into DGRW, you aren't really going to be getting a massive dividend or massive cash flow day one, which side note, DGRW does pay dividends on a monthly basis, which some investors really seem to like. Even though it's not the biggest dividend, DGRW has raised a dividend consistently over time. Now, because I promised you every single one of the dividend growth ETFs that we're going to go through in this video do have the potential to make dividend growth investors rich relatively fast. Looking at DGRW's performance so far, if you were to have started with $10,000 back in 2013, and if you were to have reinvested the dividends along the way, that $10,000 invested into DGRW would have been $34,700 just around 10.5 years later. which is an average annual return around 12.47%, which honestly is not bad at all. Now, the next dividend growth ETF that has the potential to make investors quite a bit of money in a relatively short amount of time is the Schwab US Dividend Equity ETF, or SCHD. Now, just a side note for me personally as an investor, SCHD is currently an ETF that I'm loading up on a ton of shares of on a consistent basis, and I'm sure you've seen by this point tons of other videos where we go into depth on this ETF. Now, the reason I'm choosing to buy so much SCHD right now and not other dividend growth ETFs, even though there's so many other great ones out there, is because SCHD does offer the biggest starting dividend yield and good dividend growth, but we're going to go over that in a second here. SCHD's objective is pretty simple though. It's to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now, Dow Jones US Dividend 100 Index is full of different stocks, around 100 of them, that all pay dividends and all have a history of raising their dividends pretty consistently. Now, to prove to you that this ETF also has the potential to make investors rich over a relatively short amount of time, just back around 13 or so years ago, this ETF was around $25 per share, and now it's at 75 plus per share. Not to mention this ETF pays a dividend on a quarterly basis, and it's pretty massive. SCHD also has a tiny expense ratio of just 0.06%, which is helpful, especially as you build up a larger and larger portfolio. Now, the holding breakdown is not necessarily my favorite part when it comes to SCHD, although I still do think that the holdings are pretty decent. The top sectors being things like industrials, financials, healthcare, technology, and consumer defensive. And some of the top 10 holdings being things like Broadcom, The Home Depot, AbbVie, Texas Instruments, Merck, Amgen, Chevron, Cisco, Pepsi, and Coca-Cola. Now, all in all, around 100 different holdings with SCHD, so not as diversified as that of DGRW, but still super high quality. But in my opinion, this is where SCHD really shines. Like I said earlier, I think every single one of these dividend growth ETFs does have their own way of really shining through. The trailing 12-month dividend yield as of right now is around 3.53% with SCHD, which is substantial, especially considering the price appreciation potential or historical price appreciation, and also the dividend growth rate, which is really, really big. 9.4% on the 3-year CAGR, 13% on the 5-year, and 11.3% on the 10-year. And the dividend growth is very easy to see if you just zoom out on all the dividends that were paid since the start of SCHD. 12 cents back around 13 or so years ago, and the most recent dividend that was just paid in December, 74 cents, which is insane. Now, the last dividend growth ETF that you could of course combine with DGRW and SCHD, or of course buy any of these on their own, etc., would be VYM, or the Vanguard High Dividend Yield ETF. Now, VYM's product summary says seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. Now, with VYM, just like SCHD and DGRW, has grown like crazy in ETF price over time. And since around 2006, the ETF has over doubled in price. The ETF also offers a cheap expense ratio, which just like SCHD is at 0.06%. Now, VYM, just like DGRW, has a lot of super high quality holdings, 450, which makes this ETF very diversified, which I like once again. Financials being the biggest portion of the ETF as of right now, then we have consumer defensive, healthcare, industrials, energy, and technology. And the top 10 holdings are very familiar, super high quality blue chip names like JP Morgan, ExxonMobil, Broadcom, Johnson & Johnson, Procter & Gamble, The Home Depot, Merck, AbbVie, Chevron, and PepsiCo. Not to mention, VYM also has a really solid starting dividend yield right now, over 3% with the trailing 12-month 3.15%. And also has significant dividend growth, and even if it's maybe not as high compared to something like SCHD or even DGRW, it's still significant, and this ETF still has the potential to keep going up and up in price, and at least historically speaking has paid more and more in dividends quarter after quarter for many, many years now. Now, lastly, just like we did with DGRW, to look at a $10,000 investment in SCHD back in 2011, that $10,000 with dividends reinvested would now be around $42.9 thousand, or around 12.7% average annual return. Not to mention, since around 2011, VYM also would return over 11% on an average annual total return, which is still significant, and just proves the point once again that a relatively small amount of money invested into certain high quality dividend growth ETFs like the ones we went over in this video have at least so far given investors a boatload of returns to this point. But now I want to hear from you guys down below, out of DGRW, the SCHD ETF, and VYM, if you were for whatever reason only able to buy one of these super high quality ETFs, which one would it be and why? If you enjoyed this video, make sure to please drop a like and subscribe for more content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.